Hello traders and welcome in a new daily market analysis video. Today is the 6th of June and this video is brought to you by the market research team at PU Prime. Today is basically a beginning of a new trading week and it's basically with a very light volatility so far. We're not having many movements in the markets. So let's have a quick look on the markets today. What does the technical analysis tell us? And we'll basically skip the economic agenda part because basically we have nothing to look for today on the economic agenda. So let's look on the markets from the technical side. Please stay tuned. Starting with the Dow Jones or the US indices, the US 30 today, basically we are still trading below the key resistance levels that we mentioned during the past week. The levels are basically 33,470 and the 34,000 points on the US Dow Jones. This basically is still a correction on the US 30 or the Dow Jones here. After a strong movement to the upside, the market is trading in a sideways range. I do really expect that this resistance will not be able to hold the prices below, and we will be targeting the levels of 34,000, from where we will be starting the decline again back to the lower limit of the price channel. So we are basically bearish on the US Dow Jones. However, the best areas to go short, or the best levels to go short, will basically be the 34,000 points on the US Dow Jones. The same goes basically for the S&P 500. It's basically still also trading in the same correction. Nothing much. We are having this sideways range after a sharp move to the upside where we created or formed a new higher high. So basically after this sideways range, we do expect a continuation, and the best areas to go short on the S&P 500 should be the 4,300 points. However, we'll just need to wait for the US market opening today just to know what the risk sentiment for this week should be. Basically, if the risk sentiment is on, basically we do expect this continuation to the upside to reach the resistance levels, and then we will be shorting the US indices. Going forward and having a look on the gold trading, basically we rejected the levels of 1867, which is the 38.20% Fibonacci level. However, there is such a very small false breakout to the upside, and we are still trading in this sideways range on the US or on the gold trading just around the levels of 1852. What we will be looking for during the day is basically a decline lower to the levels of 1828, which is the previous low, and basically we will be having this downward move, which is also supported by the momentum on the 30 minutes time frame. So this is a sharp move to the downside. This is a directional movement. We are having this correction. It seems to me that the correction has already ended here by a break below the previous, or this very short upward trend. A more conservative approach will be a wait for a break below 1850. So as soon as we have a clear break and a close below 1850, we'll basically short the gold back to the levels of 1828 on the 4-hour time frame. And ending our video with the US dollar index, we are still basically also having this sideways range, and during the day we will be going long on the US dollar, and the best areas of interest should be the support around the 101.64 points. So a decline, a very short decline down here of 20 pips, and then we do expect some bullish price action to enter from here and continue the movement upwards, basically within the same trading range that we are having at the moment. So that was all for today's daily market analysis video. Thank you so much for watching, and please stay tuned for another video. Please stay safe.